Great. So Manohar has given us a great picture, an overview of the open finance landscape, particularly in this part of the world, and the challenges of operating across different countries, different levels of digital maturity, different levels of infrastructure available to support a business. And so now what I'm going to welcome our second keynote speaker, Todd Schweitzer. He's the co-founder and CEO of Brankas, who is also deeply involved in improving the open finance capability across the region. And Todd, great to have you back at API Days Singapore. It's been, I think you've been with us since we started back in 2019, but the space keeps changing and evolving and expanding, and you're growing with it. Welcome.
Yeah, thank you so much, John, and welcome.
So I'm looking forward to hearing from you about the different commercial models that can apply in open finance, particularly in this part of the world. Over to you.
Wonderful. Thank you so much, John. And really congratulations to the API Days team. I'm glad you pointed that out, John. This has been, I remember the earlier API Days Asia events, which were small, a little bit cozier, but always very focused on kind of next generation API technology to support and kind of upskill traditional industries. And I think financial services is a core piece of that. And it's been an honor to be part of the API Days events over the last few years, and just really impressed with what the team's been able to achieve. So thank you very much for the invite, and looking forward to sharing just one perspective on APIs as they relate to open finance and digital financial services. What I want to talk about today, and please, I encourage questions from the audience, and I know John will have a few questions later. I'd like to shift the thinking on open finance from a regulatory compliance exercise where one day the central bank requires banks to provide data APIs and expose their data to third parties, and then banks have to worry about how do they protect and retain customers. I think that has certainly been the case in markets like Europe or the UK, where this has been primarily a compliance mandate. And banks and fintechs have learned to adapt to that mandate and actually build new business models from it. But the starting point was a regulatory requirement to drive competition, and a regulatory requirement primarily focused on data APIs. I think in Southeast Asia, which is where Brankas operates, it's a different market. It's really led by the industry. In the absence of clear regulatory guidance around open finance, there is really no regulations requiring banks to publish APIs. But what we're seeing is so much bottom-up innovation from banks, from non-bank lenders and e-wallets, and from fintechs that are participants here, and actually identifying and scaling new commercial models that are driven by API-based financial services. So that's what I want to share today, is hopefully trigger some new ways of thinking about how open finance APIs can actually be a new business driver for fintechs and even traditional financial institutions. So just 2 seconds about me. So I'm the co-founder of Broncos. We're an open finance enabler across Southeast Asia: Indonesia, Philippines, Singapore, Thailand, Vietnam, and more to come. We really do two main things. Number one is we provide API management middleware for financial institutions that are looking to launch external APIs, really helping the FIs tech up their stack so that they can publish and monetize commercial APIs. We also do API aggregation, which is providing a simplified way for API consumers to access multiple financial services through a single simplified and standardized API. And we do that really across the region. Beyond Brankas day-to-day, Brankas also chairs the Open Banking Working Group for the Indonesia FinTech Association. We sit on the Advisory Council for APIX, which is the Singapore Monetary Authority of Singapore's initiative to drive kind of some common infrastructure for APIs. And then Brankas has also been a facilitator for the Philippines Open Finance pilot. The Philippines has really been a leader in some of the industry-led and industry-governed open finance activities. Okay, a few key messages I want to share today. Number one, I'm not going to be referring to open banking or open finance anymore because I think it's actually a term that is a little bit too vague, and different countries and different stakeholders apply different biases to that. So I'm going to call it API banking, right? So API banking today, what we're seeing is it's a new revenue driver and can be a new channel for sales, onboarding, and account servicing, and even customer engagement. Number two is, yeah, if it's bold enough to say, I think the API banking tech stack has arrived. So it is clear now what the components are, who the leaders are, and even what open source tools are available to allow a financial institution or a financial services provider looking to publish APIs to use a common set of tools and speak a common language. Number three, we are still very early in the adoption curve, but as I'll share in a minute, it slowly then all at once, and we're almost at the all at once point in that curve, but still early as of today. Okay, so when we talk about API banking, what does this cover? Of course, it can cover data and customers being able to link their account to an account or their account data to a financial services app or a budgeting app, right? And that was the starting point in Europe with the AISP model, and that's often the starting point for some open API products in Southeast Asia. But I would encourage the audience to think much more broadly, because there's much more exciting, more value adding, and frankly, more commercially viable API-based products that we're already seeing now in Southeast Asia. And I'll be giving some examples of that. So number one, everything payments, whether it's retail payments so that you can pay by bank at your e-commerce store or top up an e-wallet from inside the e-wallet app. Identity and authentication. Keep in mind that most of Southeast Asia, there is no national online identity mechanism, identity check, right? So for each fintech or each bank to need to do KYC all the way from the start is a massive drop in conversion. It's a massive expense on the onboarding journey. And so we're seeing some new ways to do identity and authentication as part of a financial services flow. Number three is account opening, whether that is a retail savings account, whether that's a crypto exchange, or whether that's even a loan origination or a BNPL account being activated. We're seeing standardized APIs that can be surfaced on third-party apps to trigger account origination. Four is loan origination. Tons of activity here in BNPL, consumer financing, SME financing, and merchant lines of credit on e-commerce that we're seeing. Salary advances, these are all being developed as third-party APIs that can be surfaced on a third-party app that is much closer to the end user than if the financial institution were to build out that product and that distribution entirely on their own. Card issuing, I think Visa and MasterCard in particular have been quite aggressive already in APAC in thinking beyond the traditional cards business and thinking about new ways to do issuing and new use cases for kind of one-time or specific use card numbers. So I'll be sharing that. Investments and brokerage. So of course, Indonesia, we've seen a lot of exciting neo brokerages and retail investment and fractional stock trading applications, and we're starting to see those being surfaced on third-party apps. So, whether I go to the Robinhood equivalent in Indonesia or the Philippines, I think very soon we will start to see a way where you can access Robinhood type neo brokerage products on your digital bank app or on your e-wallet app, or even as part of an e-commerce or travel app. And then last is an API marketplace where financial institutions can actually offer third-party financial products inside the bank's ecosystem to the bank's customers, and really building a third-party marketplace where they can start generating platform fees from that. So let's share a few examples. So this is when a lot of people think open banking, they think of this. These are screenshots from Lloyds Bank in the UK, and this is what the common perception is of open banking, which is, frankly, it's a bit hard to understand if there's even a business case here. It benefits the consumer, but is there a way to monetize this? It's a difficult case to make, right? So this is, I open my Lloyds Bank account, I tap the open banking button, I see a menu of the banks available, I agree and consent to link my accounts, and then I can see my Barclays and my Santander and NatWest Bank account data inside my Lloyds app. So that's a starting point. I think pretty simple, and commercially, I would say not very exciting. But even when you look at statement data on the corporate side, it starts to get value adding very quickly. So Brankas in Singapore, we use UOB for some of our corporate banking activities, and UOB now has an integration with Xero, which is an accounting app, so that we can have instant reconciliation whenever there's a debit or credit or any other transaction activity that passes through. So we don't need to download data from our bank accounts and upload it into our accounting platform. That's all matched seamlessly so that we can have real-time reconciliation. And that is something that we appreciate as part of our Xero software subscription, that we can link external bank accounts. Beyond data, I think an obvious one is retail payments. So this is an example from the Philippines, where inside the GCash e-wallet app, I can link my Union Bank account, authorize that linking, and authorizing a debit of my Union Bank account and a pull payment into my GCash wallet, all from within the GCash app. So if you're familiar with open banking in Europe or UK or elsewhere, this probably looks familiar. This is the PISP case. What's valuable here to banks offering a retail payment API is this is a zero marginal cost product where you can actually allow the merchant to receive funds into an account at the same bank. So funds are not leaving the bank, it's just left pocket, right pocket. And the willingness of merchants to offer a pay by bank service is very, very high, because their other options are working with a payment gateway or a payment intermediary that is settling at T+7 maybe, and they're charging 2, 3, 4, 5% total transaction cost, especially because transactions here are often low value in Southeast Asia. So the ability for the bank to provide a direct pay-by-bank API is massively valuable to merchants. Payment gateways and aggregators are happy to resell this, and customers prefer it because they often prefer to use pay-by-bank transfer. In fact, the data we're seeing is that still in Southeast Asia, 80% of e-commerce transactions are using some version of bank transfer, which more often than not is a manual transfer where you take a screenshot of your deposit slip, or you're using retail virtual accounts, or you're intermediating through a payment processor that's collecting a deposit on your behalf and then pushing it to merchant. So retail payment API is a very easy, low-hanging fruit for a bank to instantly monetize transaction data and sell it at transaction fees, and offer that as a transaction banking solution. But it's not just retail payments, so corporate disbursements, right? So a corporate disbursements API replaces the CSV upload and batch upload processing that we're probably all used to. And there are many payment processors and intermediaries that offer versions of disbursement, but actually as more and more banks and e-wallets make a disbursement API available, you can plug this in directly into your company's workflow and ERP system. So there's no need for a payment gateway in the middle to be collecting, where you top up with the payment gateway and then disperse. You can actually just authorize your bank to make an API available that you can plug into your own ERP, or if you're a lender, into your loan management system, so that as soon as a loan is approved, that you can trigger an automated disbursement. Or even insurance, right? For paying out claims, for paying out agent commissions, all this can be automated without the need for an intermediary. Moving beyond that, we're seeing more and more banks that are looking to bring in-house their payment processing entirely, right? So in the case of a conglomerate, this is an example with JG Summit, a large conglomerate in the Philippines, where they're looking at bringing their payment processing actually in-house as a solution that they can offer to sister companies within the group, within the conglomerate, as well as any corporate banking client And they can offer it directly, because if you're already an acquirer, if you already have a bank relationship, you already have your standard QR, you even have some of your fintech partners in JG Summit's case, like Grocery, you can actually enable in-house payment methods. And then most of the transaction volume is on us. So you actually don't need a payment processor, and you can offer basically a full customer checkout page or a payment link entirely as an in-house solution by connecting payment APIs and offering that as a bundle. So we're seeing more and more banks that are actually bringing in-house the payment gateway facilities to offer that as an API product to their corporate banking clients. Crypto on and off ramp. So there's a whole discussion to be had on open finance or APIs and how that relates to crypto. But I think one illustrative example that we're seeing more and more is enabling a customer's custodian account, whether that's an exchange or whether that's even, there are some other mechanisms as well, where you can use the crypto in your exchange to top up an e-wallet, to pay at checkout, and you can choose between your different methods or your different assets that are held in custody by the exchange. So in the same way you pay by bank and you authenticate, you can also authenticate with your exchange, and the exchange can then do the trade and then disperse to the merchant immediately. So we're seeing more and more examples of not only supporting cash in and cash out to an exchange, but actually using your exchange account as a payment mechanism externally. Okay, so moving beyond payments, identity and authentication. So this is an example from Singapore, where Singapore has it's a top-down kind of national ID and authentication method, which is called SingPass, starting for government services. But what has happened is it's now expanded, and you can use your SingPass now to log in and register to financial services. So in this example, for OCBC app, you can actually log in now using your SingPass. So you don't need to generate a new password and username and registration details. You can actually offer you can onboard immediately using your SingPass without going through the same KYC process all over again. So in markets like Philippines or Vietnam or Indonesia, where there isn't really a centralized way to do KYC, we're seeing more examples of banks and e-wallets that are offering their identity and authentication for KYC customers as a service to third parties, so that those third parties don't have to do KYC from scratch. Account opening. So GCash is another good example here, where they have a tie-up with CIMB, the regional Southeast Asian bank. And in Philippines, CIMB is a digital-only bank. So and most of their customer acquisition today happens inside the GCash app, e-wallet app. So as a GCash user, if I'm fully KYC'd, I can use that same KYC to basically open a savings account, which is powered by CIMB, in about a minute, right? You have to fill out a couple, like one screen of additional AML checklist stuff, but basically it's 3 taps and you have a new savings account that lives inside your GCash app. Now, this is beneficial to GCash because they have more activity inside the app, and they can get to see customer data more robustly. It's great for CIMB because compare this customer acquisition method to the typical setting up a branch, setting up bank agents, opening a kiosk at the mall, telesales or mailers, right? Compare that customer acquisition mechanism to enabling an account opening API inside an e-wallet app. And I think this has been tremendously valuable really to all parties. Card issuance. So we're seeing more examples of third-party of card issuers being able to offer an end-to-end account opening app or account opening API that lives inside a third-party site. So what does that mean? If I'm purchasing a large travel purchase at a travel website, right, a flight and hotel, I can actually apply for a Visa credit card. I can agree to share my data. I can get instantly approved by the issuer for a line of credit, and then I can use that virtual Visa card to pay for the flight purchase, all taking place inside the checkout page of the travel website, right? And then the issuer bank can then decide to send me a physical card, or they can upsell me other products. But the point is, I can activate a Visa credit card at the point of purchase right when I need it. And so we're seeing more and more examples of card issuance, again, not through mailer, not through a 4 to 8 week application cycle, but actually taking place inside the place where customer actually needs to use it the first time. SME financing. So I think the Tokopedia example is great here. Tokopedia is a the largest e-commerce marketplace in Indonesia. And what's awesome here is this is a marketplace for inventory financing line of credit. So for sellers that are selling on merchants that are selling on Tokopedia, if I'm a seller and I want a line of credit to buy more inventory before I sell it, then I can choose between. At the time when I took the screenshot, there were 11 different partners. I think there are even more than that now. And so, what does this look like? If I'm a merchant and I'm selling, electronics, right? And based on my seller history, based on my seller rating from Tokopedia, and maybe based on some other metrics about me as a seller on Tokopedia, different financing companies, which you can see is a mix of international banks, local banks, startups, even e-wallets and multi-finance vehicle lenders that have shifted towards e-commerce financing. They will all offer, if I qualify, they can offer a line of credit. And basically in a few minutes, I can just apply and approve and be funded for whatever credit I need for inventory, all inside the merchant page of Tokopedia. Right? So compare this process to the typical way where I suppose I'd have to print out my e-commerce selling history. I'd need to show other bank statements. I'd need to go to, a large Indonesian bank and explain that this is e-commerce selling history and here's my P&L for the last 3 years. And then I go through probably a month-long process for getting approved for a line of credit. Versus sharing my verified Tokopedia seller data, and based on the SKUs that I'm offering, based on my selling history, the lending partners have agreed to instantly verify and instantly approve me for a line of credit. And all of that takes place inside the Tokopedia app. So for those, in the audience that are thinking of offering lending as a service and actually working with fintech partners who can do some of the origination and servicing on your behalf, or actually make use of the potential borrower's data, this is, I think, a great example of that, where you take a process that was very manual, unverified, prone to fraud, not business as usual for a lot of these traditional lenders. They've been able to provide an API to Tokopedia that allows for instant loan origination, instant disbursement, and then repayment can happen, all based on the seller history and the wallet that the merchant is keeping with Tokopedia. So, the lenders need to be comfortable with the fact that they are now competing in a marketplace, but I think the benefits from a customer acquisition cost point of view far outweigh the potential concerns about any, we don't want to compete with other lenders, because regardless of what a lender may think, this competition is happening already. But I think it's great for the merchant because the merchant can now access instant line of credit. It's great for customers who now can shop with more inventory available. And it's great for Tokopedia because there's more transactions passing through. Okay, API Marketplace. So Starling Bank is an interesting example here. This is out of the UK, but Starling is a digital bank that has actually built a marketplace of APIs from third-party apps inside the Starling Bank ecosystem. So if I am a retail or a business customer, I can access dozens of integrations, either inside my Starling Bank app or instantly available on those apps like Xero or QuickBooks or even some pension or HR schemes. And so the idea here is that Starling, rather than building branches, rather than doing everything vertically integrated inside their app, they're actually willing to provide integrations with other financial service providers and adjacent businesses to provide an experience where I, as a Starling Bank customer, I may not even open the Starling app anymore, but I'm actually interacting with my Starling account every day because that Starling account is fully integrated in real time with the apps that I do use every day, like my ERP, like my accounting, like my HR system, or my pension my pension kind of management system, right? So it's an interesting way of thinking about financial services not as an app and kind of owned channels, but as infrastructure that can live inside of third-party enterprise or retail apps. Some other examples of banking as a service, I would say in Southeast Asia, this is quite new. That's why a lot of these examples are US and European based, but it's just to give a flavor of where I see the market heading, right? So the company on the left, these are all licensed financial institutions that offer their bank products as APIs, and the cross-border clients are actually the apps that where those financial products live. And so the example I think about, I'm a user of TransferWise, now Wise, and when I keep a US dollar balance, that US dollar balance on the Wise app is actually sitting at Community Federal Savings Bank, which is a very small thrift bank in New Jersey. But I wouldn't know that. I would never bank with Community Federal Savings Bank otherwise, but because I can keep a US dollar balance that is a white labeled CFSB account sitting in the US, I mean, you can imagine how much volume and how the size of deposits that CFSB has just by providing that distribution mechanism to TransferWise. Same with Cross River and with Metrobank. I mean, the earnings that they've received from powering the likes of Marqeta and Stripe and Revolut is massive, and it's a fascinating use case. We will be seeing more and more of that. I think we are basically in the first 6 months of banking as a service in Southeast Asia, where we see the first local banks that are looking to offer their products as APIs, and not by building branches or building apps or setting up agent networks, but actually they're relying on distribution via API. So I think this is an indication of where API banking is heading. So takeaways, why do banks or financial service providers choose to adopt API commercial models? I think number one is customer acquisition and engagement. So it's a way of acquiring new customers and engaging those customers by actually having your fintech partners do all the work for you, right? The example I think of is in Indonesia or the Philippines, they're archipelagos, right? So setting up a branch in an island province means running cash logistics to that province. It means setting up the IT infrastructure, the security infrastructure, making sure you have uptime and good connectivity to the main office. And so compare that, and often the island provinces are lower income, right? So the cost of and the economics of serving that population is hard to swallow if it's a brick and mortar branch model. But by providing APIs to fintech partners that are specifically serving those customer groups outside of the cities, the economics of acquiring and servicing those customers can completely change. So that's one, is customer acquisition. I think two is new fee revenue. So new ways of monetizing transactions, payments, customer data, and actually looking for new ways of access of generating transaction fee revenue, whether that is a data API, an identity or authentication API, all different types of payments, domestic and cross-border, retail and corporate. Platform revenue. So in the same way that Starling offers a menu of third-party products and is earning from that, I mean, this starts to look like a Google Play Store or Apple iStore for banking, right? Data insights, being able to actually link a single customer profile across entities, especially for conglomerates that have a bank asset and a consumer retail asset and maybe a non-bank lending company, they can actually link customer profiles and provide a single view. And then 5 is product innovation. So if you're offering a deposit account API and a payments API and a customer identity API, then you can provide that to a trusted fintech partner and they can build a product around it. And you don't need to be building, a new app just to serve a wealth management use case or a supply chain management use case for SME. You can actually provide the basic standardized APIs to the fintechs that are building apps while embedding your products around it. So a lot more to talk about on API banking stack, which I'll skip today, and we can cover that maybe in a later session. I do want to show it just as a closing remark. I think there are more and more use cases and demand for API-based bank services, whether it's more and more startups that are looking to offer embedded finance, whether it's B2B SaaS providers that are looking to embed corporate APIs inside their products, and traditional businesses that are launching online channels and go to their banks to ask for basically API access rather than paper. So there's more and more, I think, demand for API-based bank services, but financial institutions, in many cases in Southeast Asia, are still in wait-and-see mode. So they are either waiting for early adopters to act, and then they will adjust, and be fast followers. They want to see more clear regulations, or they consider the API user segment to be still a fringe, non-core customer segment. My response to that is a few news article screenshots, literally just from the last month, right? So Ramp, which is a B2B expense management and payables management company, they had the fastest increase from 0 to 100 million in revenue in basically 2.5 years, right? And they just raised at an $8.1 billion valuation, entirely focused on disbursements and payables management in the US. So that was in March. That was 4 weeks ago in March. Visa completed their deal to acquire Tink, which is an open banking company, also earlier in March. And then a couple weeks ago, Apple made their first open banking and financial services API investment by acquiring Credit Kudos, which was a data open banking company, which was, I think, is remarkable because you're now seeing non-fintech, non-traditional financial services companies, but massive tech company like Apple, literally investing into open banking API products. So, for those who think that open banking or API banking is a bit early in Southeast Asia, I would say that is true. It is still early. The early movers are already acting, but keep in mind that the speed of adoption happens very, very quickly these days. And I could even create new screenshots just based on April announcements about open banking activity. So these things are happening very, very quickly. So for those that are standing on the sidelines waiting to see what happens, I think you might be surprised at how quickly the landscape changes. So hopefully that was helpful. I know it was a lot of information in a short period of time, but John, I'll turn it over to you if you have any questions.
Great. Thanks very much, Todd. I mean, it's hard to know where to start because there are so many elements that you've described there. I think but the thing that stands out to me is describing finance not as a silo service, but as infrastructure that's living inside another app or service. And the examples you gave of Tokopedia's marketplace, even Gcash's ability to integrate different things shows what has already started in Southeast Asia, and I agree. I think the rate of acceleration is going to surprise a lot of people. Just one or two things I'd like to pick up on. So you mentioned about corporate payments providing APIs so that enterprises can initiate payments directly from their ERP. So in order to achieve that, I know that Xero is very API enabled in terms of how they structure their service. The other accounting and ERP solution providers, when they see an API from a bank or other financial service provider, what's the mechanism for starting to use that? I mean, is there an onboarding process that needs to happen with those solution providers, and how quickly do you see that sort of happening? Because for an enterprise, they may be using someone's solution and they see that their bank has this API. How do they make sure that their ERP solution provider is able to access that?
Yeah, it's a great question without an easy answer. I think I'll start at the finish line, right? So what I want as a business customer, I want to choose the accounting or ERP or payroll management software that I want to use. I want to be able to open a menu, find my bank logo, right? Click that, do some kind of authentication to say, yes, this is actually Brankas' account, right? And then boom, I have reconciliation. I can activate payables. I can set up the maker approval hierarchy, but that would live inside of the software I'm using so that I don't have to go back and forth between the corporate banking portal, CSV files that I've downloaded from my accounting software, and I can activate that inside the accounting or ERP app, right? So that's where we're heading, right? Banks are pretty unfamiliar with that today. I think that the SaaS providers are ready to go. I think they see that, they understand what they understand. It provides a lot more engagement. It provides a better product. So I think the learning curve is on the bank side to make those APIs available, and to provide an onboarding process, as you rightly point out, John, that is palatable to the user, right? I will say today in Southeast Asia, the best or the most advanced onboarding flow I've seen is for corporate disbursements in particular is, so the bank still requires some kind of onboarding process, but it is a faster process if they're working with a master licensee. So in the case of Broncos, just to give an example, because biased example, but it's the one I'm most familiar with, Broncos becomes a master licensee of the bank's corporate payments API. We take responsibility and some liability for our customers that are corporate customers that are consuming that API. But what that does is it takes the burden off the bank for doing the IT checks and the onboarding for each corporate API user, right? So then we sublicense access to the corporate payment API to our enterprise customers. They fill out a 1 or 2 page basic approval questionnaire. It's still paper, but it's a 1-page paper that should be processed within 2 or 3 days. And that basically does 2 things. That number 1, they're giving authorization to activate a payments API that's debiting their bank account, right? And number 2, they are giving permission to a facilitator, in this case Brankas, to be managing that API connectivity on their behalf. And there's ways to set this up that make sure it's secure with multi-party keys and encrypted data so that Broncos is not seeing the transactions that are going through, but we are supporting the bank so that the bank doesn't need to do the manual onboarding. I guess the last thing I'll say is I think the reason why we have this structure, which seems a bit maybe messy still, is because the banks do not have the IT operations in place to onboard corporate API users. It's just not, I have not found a bank that really has built out that ops team that is basically an account activation team for API products. It's really pretty outside of their skill set. So they can do it for one, they can do it to Brankas, and then Brankas is activated. We've gone through all the security checks. We go through the regular pen testing. And then we are providing, if we're the backhaul, in the broadband analogy, if we're the backhaul, then Brankas is the one providing fiber into the apartment building, right? And the apartments being each of the enterprise users who are also customers of the bank.
Thanks very much for sharing that. I guess it reflects that you made an earlier point about the some banks realizing that they have already onboarded customers and they can act as a trusted identity provider where there is no national digital identity provided by a government. But what it takes to achieve these things is for organizations to take an external view and have people who are capable of interacting externally and not just inside their own organization.
Right.
But I guess that's what APIs help to enable. So thanks very much for sharing those insights, and it's a great start to our day. We have other speakers later on in the day. We have a couple of speakers from GovTech talking about SG Findex and the MyInfo service that is running here in Singapore. But we also have other speakers who are going to discuss how this plays out in other countries in Southeast Asia. So thanks very much for kicking that off.
My pleasure. Thank you so much, and congrats again to the API Days team. Great event so far.